Mortgage rates right now are being shaped by an numerous amount of outside factors that no one really can even guess. Trump firing people, the Fed possibly or possibly not cutting rates, the bonds, if we're going to go to war, all of the different things. In today's video, I'm going to be breaking down exactly what's going on right now so it doesn't feel so overwhelming about what might happen with mortgage rates. But first, I am a realtor here in Irvine, so if you are looking to buy, rent, or sell, or refi, make sure you reach out to me. All my information will be in the description below, but I'll also put my number right here. That way you can easily give me a quick text or a call. But now, we'll get back into the video. So number one, let's break down what's happening with Fannie Mae and Freddie Mac. So right now, the Trump administration, well, let's back up. Fannie Mae, Freddie Mac are the two big institutions that back most of the U.S. home loans. Now we know what that is. So they're two separate entities. But right now, what the Trump administration is trying to do is blend them and also make them kind of like a publicly traded company into the great American mortgage company. So the idea behind this is to ease rates and ease the accessibility of getting approved, ease restrictions. Other people think it's going to do the exact opposite thing. It kind of just depends on how you look at it. But I think there definitely is possibility for an ease of restrictions, and with that, having to have, lenders and banks compete for business could drive down rates. You also could look at it the other way where it might feel a little bit more monopolized and the interest rates could raise from that. So it really just depends on how the market and the shareholders and the investors view it. But it's something to keep an eye out on. Number two, the Federal Reserve drama. So Mr. Jerome Powell loves to just mess with people. No, but he's great. But the basic idea, Trump right now wants to fire Jerome Powell. Jerome Powell is like, you can't fire me. And there's just been some back and forth. With the most recent Fed meeting, what we saw is they pretty much guaranteed four Fed rate cuts, September, October, November, and December. Because of that, we saw interest rates go down in anticipation for it, and here's what will happen. If they cut rates relatively similar to what they were saying, rates, if anything, will stay the same, if not go up, because it's in anticipation how mortgage rates kind of go around the Federal Reserve cuts. Now, let's say they cut even more than what they were saying. Then interest rates will definitely go down. But if it's similar or less of a cut than what they were saying, rates will go up. So the basic way to put it is if September, October, November, December, all of the Fed rate cuts happen exactly how they said that it was going to, right? So it will stay the same, if not go higher. If they do less, same, probably for sure go higher. If the Fed cuts rates even more, then it'll most likely go down. But again, there's so much impacting rates, and we'll get more into it. But if no other outside things happened and that just happened, that's what we would see with rates. Number three is the mortgage industry is shifting. There's so much change right now. There's so many new restrictions, so many new allowances. How lenders are able to work with clients, how they're able to work with banks is all changing. So the actual industry around mortgage itself is also changing, which can also have an impact on mortgage rates. The basic idea is depending on how certain people breathe, the mortgage industry will change. So right now, there's just change with rates, change with mortgage industries, change with lenders, change with banks, change with the actual holders, the shareholders. There's just been changes with everything. And fourth, we'll get more into the agency and loan programs that are changing a bit. So Fannie Mae and Freddie Mac are changing some loans where they can have as low as a 3% down payment. That way, it just allows for more buyers to get into the market more comfortably. Also, they're talking about having home loans and allowing for more of a internet-based approval system. There's also talks about having more of a kind of open tracking system with all of the new credit changes where paying your rent can go towards your credit now. There's just so much that's kind of just creating more allowance in the market right now. That's just the more availability for people to get in will be able to change the rates in the way of if we can have more people who are able to qualify, it will definitely have a direct impact on how easily lenders can lend to us and how much they'll have to compete for our business if even more people are funneling into the market. So number five, what it means for buyers. Now, I know that all of that was kind of loose and not concrete, and that's because there really isn't anything that's concrete. They're trying to make changes to make things easier. Some of the changes that they're doing, people think it's going to be good. Some of the changes that they're doing, people think it's going to be bad. So what do we know right now? Rates have held pretty steady between 6.5 and 6.6% for the past couple of weeks, hovering the lowest they've been within the past 10 months. So what does that mean for you? If you can comfortably afford a home in today's rates, you just got to go for it. We have no clue what's going to happen. Rates could skyrocket, rates could go down, rates could be the same. If they go down, refi. If they go up, you'll be happy you got in. If they stay the same, well, then they stay the same. There's just so much right now outside. Wars. We're at kind of war with like 10 different countries right now. There's just so much going on. So what it means right now is people are afraid. And when people are afraid, there's opportunity. And because of that, the people who are in the market are seeing great savings, great leverage with negotiation. Prices are coming down in certain areas. Seller concessions are helping people buy themselves into lower rates. There's just so much opportunity right now because of the uncertainty. So if you're one of the people who is fortunate enough to be able to afford in this market, it's one where you can do a lot with it. But that's really the top 5 things that are kind of changing in the mortgage industry right now. I hope it made a little bit of sense. I know that it's kind of hard to make this make sense, but hopefully it helped at least a little bit. And also, make sure you subscribe because I release videos just like this every single Friday detailing the benefits of homeownership, how to buy a home, and just kind of the market in general. So make sure you don't miss out on that. But as always, thank you so much for tuning into this week's video. I hope to see you in the next one.